welcome once again to our podcast. Now done with the first half of 2019. I almost said 2017. 2019. 2020 is around the corner. A lot of 2020 milestones all over the world about global sustainability and blah, blah, blah. But I think for the first 6 months of the market locally and internationally, despite, it's been a difficult market, and a difficult economy, but I think we've done pretty well. Aussie's up 12.2%.
Yeah.
So under the circumstances, and the S&P up 17.35%. So if you compare to the S&P, that's like wow.
Yeah, and we are, and it 12.2 is more or less probably what we would expect a market to do in any one given year for us. So we could shut and go home and be happy. Of course, we want more, and we've been flatlining for a number of years, so we're hoping to catch that up. We're 20% off the lows of the last quarter of last year. Mm-hmm. But to your point, it doesn't feel like it locally. Even in the US, S&P is back at all-time highs yesterday, being Tuesday. And even in the US, it's like not feeling like it. In South Africa, very much so. That GDP number for the first quarter, the petrol price increases, we come down this month, but it just feels everything's terrible, yet the market's going up. And that's often what will happen, and what that means is that we oftentimes actually miss the beginning of the rally. So in a year's time, when we are 40 or 50% off the lows, suddenly everyone's like, oh, time to buy.
Yeah.
Sure, but actually it was a while
ago.
back. Yeah. So we're having a fairly good year, and if I look out now, aside from a left field sort of black swan, etc., I don't see what's going to derail, which means we should be closing probably around 15% for the year at a minimum. The Naspers moved to Amsterdam, which is now only in September. If they can close half of that discount, make it the discount from 40 to 20%, that in of itself will add 4% to our market. So we're on track for a good year.
Provided.
Lots of if buts maybe. Stuff can go horribly wrong. But it's also, we're looking at when I say horribly wrong, the first thing that comes to mind is Eskom.
Yes.
And more load shedding. But truthfully is that, the SA Inc. stocks are really being battered, and this rally has been basically on the back of predominantly on resource miners.
Yeah.
And, it's the Resi 10 that's really been the winner here.
So I actually picked up we drew some of the numbers here, and resources so far up 20.7%. That's for the first half. But platinum, 63.9% Jan to June, and from last year, so past 12 months, 143.5%. We wouldn't have said that 2 years ago.
No, and so it's mostly Anglo Platinum and Implats. Lonmin's gone. Those are the two heavyweights in the sector. But and if you look at it, so over the last year, sure, the palladium price has moved, the rhodium price has moved, but we are mostly a platinum economy, and platinum price itself hasn't done much. The rand is broadly flat. But what we have seen, and more so in Anglo Platinum to a lesser degree in Implats, but certainly we've seen it there as well, where they have restructured the businesses, and they've got rid of debt, they've moved down the cost curve. Anglo Platinum got rid of Union Mines, and there's more expensive mining operations, etc. And they've positioned themselves incredibly well right now. Now, of course, the biggest platinum miner is now Sibanye, having bought Lonmin last month, and Stillwater 18 months ago in Canada. Imagine what would start to happen if the platinum price started to move. Now, we saw back in sort of May, we saw some early signs that maybe it was, but if platinum could suddenly get to 1,200 and the others, rhodium, palladium, etc., stay where they are, then these stocks are just warming up. But it's been phenomenal moves from them, and it's been, in part, as I said, the non-platinum PGMs, and in part just the businesses getting themselves well positioned for the cost space that the costs that the prices they're receiving, the price space. You're a price taker. You can't control what you get for what you sell, but you can control your cost base.
And to touch on that, I think the platinum story is like I said, surprising. But obviously, with the concerns going forward, a lot of people might look at or listen to these numbers and go, definitely, I should probably jump in.
So if you're jumping and you're making a call on the PGM basket, mostly platinum, as I say, and you're making a call on the currency. Currency is fairly stable at around the 14 to 14.50. We blip out occasionally when somebody says something, and suddenly we're north of 15. But mostly we then come back into that zone, and we are seeing US dollar weakness, which is leading to EM currency strengths across the board,
yes,
ourselves included. But at this point in the equation, the strong moves have been made. Those savings which I've mentioned, closing shafts and moving down the cost curve, those are in the price. There's not a heck lot left to happen there. Really what you're now saying is you now need the metals to move. So if you want to jump into them, the question is, are we going to see platinum go to 1,000, 1,200 or 1,400 or something? And at this point, the answer is no. But what's the platinum price? And if we start to see platinum moving strongly, then the miners are going to start moving again with immense strength. But at this point, it does seem that horse is bolted. And I said that on Kumba at 350, and I was totally wrong on that. But with the single stock commodities, you really got to get in earlier rather than later. Goldfields during May and June. Gold's now moved, but the Goldfield price, the share price of the stock, has already moved and almost sort of accommodated that 5-year high in gold at above 1,400.
And I wanted to chat a bit about the listed property space and focus on Into. But listed property has been,
it's been a horror show.
Not its best showing. I think only Jan was sort of like a somewhat positive month, but ever since it's just been...
Yeah, it's been 18 months of pain, and that goes back to the concerns and resilient and... who those peeps out of the US now, and how did I who are they? The people who went for Steinhoff.
Viceroy,
there we go, the brandy makers. And then those 18 months, listed properties had a heck of a time. If we look at local listed property, the valuations are reasonable. You've got prices at around net asset value, you've got yields above the 10-year at about 9%, 10 years at about 8%. And I've been saying that since December, and the prices carried on falling. But the valuations are reasonable. If we start moving into the UK, and there's Capco and Into. Capco is different. They've got two great assets. They're going to split in half because, truthfully, they got one great asset and one okay asset. Intu's suffering from all of the issues which are currently plaguing the UK. So it's Brexit. It's concerns around growth. It's concerns around how and when Brexit will happen. It's concerns around the economy generally. And what we're seeing is high streets struggling. I was looking at some UK funds, and the ones that have done incredibly well are those that are doing high-tech warehousing for the Amazons and the like of the world. And they've done incredibly well. Intu's got a lot of sort of second tier and into Europe properties and the like. And the market's just taking a deeply jaundiced view of them. And they, on all metrics, are trading to discount to net asset values. Now, we can, even if you slice 20 or 25% of the net asset value, it is still cheap. But we've got to remember that Intu's had two suitors who've come to buy them, had a look around, one of them being Hammerson, and decided, no, thank you. So there's something there which the other players in the market aren't liking, so they're not being bought out by anyone, and which the market in of itself is not liking. And I think it's just, if you've got Earls Court, Covent Gardens, you've got real proper high end, there's going to be demand, and it's still tough for you. If you've got the second tiers in Manchester and places like that,
it's going to be...
You're really, really struggling. And there's two squeezes that come on you. One is renegotiating leases, and you're not getting the sort of increases in rentals that you would like. Now, those leases are locked in for their duration, but at some point they expire, and now you've got to redo them. You've got debt, but debt is still incredibly cheap. But what starts to happen is you revalue your properties, and those valuations come down, and that puts your loan to value under risk. And then you maybe got to be selling some assets, and we've seen it locally with Rebosis and others. You've now got to offload those assets at prices below what they were on your balance sheet, and that then starts a sort of a spiral process, which just then becomes immensely ugly. Now, there's going to be a point in our future. and it might be next month or it might be 2030 when we'll look back at some of these property stocks and tell our youngsters, I bought that at such and such a price. But at this point, what's the catalyst to get them moving higher? And locally, I'm just saying I've got time on my side and I buy the ETF and I put it to my tax-free and I'll come back in 30 years and all will be great.
We'll see. I
don't have 30 years, of course, as I say that. I'm not quite that young. But it's where's the catalyst? And right now, the Brexit's going to go from messy to messier. I mean, Johnson's probably going to win. He's saying 31 October, no question asked, hard or not. It's going to get messy, and I think we might still see. I don't see buying, if anything, selling continuing. Yeah, and I mean, I remember when Brexit happened and Capco at 55, and I thought, that's a good price. And well, no, it wasn't.
No, apparently it could get worse.
It could get worse.
And as we've seen, it does. And I suppose as we're getting closer to results reporting, for most, and I'm thinking specifically about banks, and I want to just touch on FirstRand, because I'm thinking so they do their full years when everyone's doing their half years.
Mm-hmm.
Oh, Lord. But this is probably like the first set of results where we'll get a nice, decent picture about their UK acquisition.
Mm-hmm.
And Aldermore.
Mm-hmm.
And given what's going on in the property space and the uncertainty still about Brexit and whether or not it'll happen, blah, 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 what do you think? Just, I don't want to say speculating, but speculating, where do you think the upsides or downsides, or what are the likely shock factors we might get out of there?
So what we've seen with the banks and the results of the last couple of years is single-digit HEPS growth, which in our economy is frankly not bad. The bad debt situation in South Africa with consumers is not a problem, and that's thanks to the National Credit Act and all of those that have come in over the last 10 or 12 years and have worked. And we've seen the impairment levels on all the banks sort of between 0.4 and 0.8%, whereas I really was expecting some of them to maybe go over 1%. But the requirement for lending money and know your customer and know who they are and everything really has worked and is saving the banks and doing them a good job. The big number I'm always watching is cost to income. They're struggling with that because your income is going up a little bit, but your costs are where you're taking the pain. And that's not just your more controllables such as staffing and the like. And perhaps with the property companies under threat, you can do some squeezing on your landlords. But it's your administrative costs, it's ESCOMs, it's those sort of fees. Load shedding directly doesn't impact a bank, but it impacts their customers, their businesses, their mom and pop stores who got credit card transactions who didn't credit card transact for 2 days because there was no power, and that sort coming through. So probably we're going to see broadly in the South African space in the banking, we're going to see those low single-digit HEPS growth. Capitec being the exception, and of course, ETC out of East Africa helped Nedbank and the like. The FirstRand UK acquisition, I'm a burnt investor with large deals. So
a lot of South Africans are.
Most of us are these days, one way or another. So I worry about that. I got to say that FirstRand, the executive team there, don't strike me as a company who would have rushed off and done a desperate Woolies or Famous Brands style transaction. But I do think that it's probably not going to be delivering massive, double-digit growth. I mean, it's probably going to come in at the same sort of low single digits. So, if any of these banks can come at 8 or 9% HEPS growth, that's going to be caught knocking it out the park.
Yeah.
Aside from Capitec, which is a different game entirely. And I don't see that happening. And now there's a lot of snipping around the sort of cheap bank accounts.
Yes.
And I know all the big banks are trying it again, but Capitec's now got serious competition in terms of Time Bank and others, and Michael Jordan's Bank Zero is coming, and of course Discovery Bank is coming, and they're aiming at the high net worths and stuff. So this has become a price war zone, but we don't yet have the price wars. And I'm wondering, if the banks can resist that. And I think they have to. As much as we look at our bank fees and we think they're too much, at this point, the banks aren't in position to cut what is, in essence, their bread and butter. That non-interest revenue, they can't go slashing it. They're going to lose some at the margins at the bottom ends to the Times and the Capitex of the world. But they've been losing, Capitex are 10 million clients in the last 10 years. So they've been losing that over the last decade, and they have survived anyway.
And I think part of, and it would be very interesting to see a very wide survey. But I think as South Africans, we are also multi-banked. A lot of
That's
South
actually
Africans
a good point. We
bank
probably are.
Minimum 2.
Yeah. I mean, I'm multi-bank just because I'm lazy and because I never got around to closing, and they give me a card which gives me lounge access. And then oddly enough, I'm thinking, and a couple of my friends aren't, but I think that they're not the rule. And I think more broadly, I think a lot of people are. Yeah. And a lot of that comes from debt, where you would shop around for a home loan or a car loan or something, and your bank, another bank, would give you a better deal
than your bank.
And then you open a little account there as well. So, and certainly the big, if we look at the sort of big 5 or 6 banks, there's probably there's more accounts sitting there than we are seeing in terms of population. And the one space where they say they can't cut our fees, what they are doing is closing branches. Now, Standard Bank's just been through that. Truthfully, all the banks have. The difference is Standard Bank did it much more publicly and did it in one show. That trend, I think, is going to continue. I don't know, aside from coming to this building, which is obviously a corporate, not a banking, not a branch, I don't know when last I went into a branch. I mean, it's years and years and years and years and years. It's all now just online or telephonic or stuff like that. What we are seeing, the banks are very well priced with very strong balance sheets, no impairment risks really floating on the horizon. When we start to see our local GDP pick up, and who knows when that will be.
Fingers crossed.
Well, and there's a problem. As soon as GDP starts to pick up, let's say magically we start hitting 3 or 4% GDP. Question is, can Eskom provide the power that is required for that level
to sustain
of growth?
that? Yeah.
I don't know the answer. The Eskom is a complete enigma, wrapped in a riddle and hidden under a rock and type of scenario. I don't know what the story is there. I know that it's precarious. I mean, their debt's another story. What I'm worried about is their ability to produce power.
Yeah.
And suddenly we had load shedding, and then suddenly we didn't. And was it just a trick for the elections? But no, that election's 2 months ago, and we still got power. So it wasn't just.
But does everyone have power?
Well, the thing is, as soon as we start getting some growth coming through, banks are so well positioned. To, if nothing else, some GDP growth, say 3%, which is your post-inflation numbers, so 6, 7, 8%, just those more transactions going through the credit card terminals, and the snap scans and the like of the world, boom, that's bottom line to the banks. So they're incredibly well positioned. Again, they have been for a long time. We need some GDP growth coming through.
Waiting for the, not right moment, but for the right shift.
And there has been some glimmers of positivity coming through in quarter 2. And I stress the glimmer part, but we're seeing some data coming through which is not as bleak as it feels out there. We said up front that it doesn't feel like we're up 12% year to date on the top 40.
No, it really doesn't.
It really, really doesn't. And we're actually seeing some data out there, around consumers, around that sort of stuff, which is slight little green shoots. Now, they could die on a vine in 5 minutes, but this could be something starting to happen. But can Eskom keep the lights on?
Big question.
And that's the huge question. And if Eskom can keep the lights on, then there's every reason that perhaps there is some glimmers coming through. We're seeing a weaker dollar that looks to be slightly structural, which means stronger rand, which helps in the petrol price. Suddenly, not suddenly, but things can turn quicker than we think. And although there's lots of reasons to shake and scratch our heads in this country, we could suddenly be sitting on a 2.5% GDP, which is not a great number. But relative, it is a great number.
It is much better than what we're doing.
Well, look, 2.5% GDP is actual positive growth because population growth is closer to around 2.1. So then, as individuals, we're actually getting richer. We haven't seen that in the better part of a decade.
Yeah. And now to move on to a different side of banking news. So, as many may or may not know, Daniel Minele is leaving, or has left, the Reserve Bank, and there are rumors that he is going to ABSA.
Yeah.
And because we've discussed the lack of succession planning and not quite understanding why this wasn't something that the bank saw coming, because it's not like Maria was turning
40.
Exactly, guys, so, but we've discussed this. But Simon, I wanted to get your thoughts on Governor Minele at ABSA. Personally, he's a man that I've admired, and I think even during my journalism days, I found him,
I think he's
just
great.
incredible asset to the state, to the state via the nationalized Reserve Bank, and very knowledgeable, understands the system, our Reserve Bank, very, very well, and it would be an interesting move to go to the bank, and I suppose it wouldn't be from the Treasury and Reserve Bank angle. It would be very interesting, especially considering that you had Lungisa, who came from Treasury, but came to Standard Bank, and just that move from the public domain, and it's not really public service, but public service in a roundabout way, to the banking sector. What are your thoughts on that?
So just on that, on the moving from public, quasi-public to private, I think, as long as there's there's some sort of proprietary, in the sense that you don't leave and suddenly tomorrow you're at a new bank and they've got state contracts. None of that type of stuff.
Yes.
But we're not expecting that. That's not on the table. That's not an expectation. I think there's a good transfer. I think it's good to transfer skills in both directions.
Yeah.
And certainly we've seen Nene go into some boards and the like, etc. I think moving in those two directions is actually, I think it works. And we've seen Joel Marcus, who was chair of ABSA for a while.
Mm-hmm.
Of course, Mira Ramos came from Treasury and Transnet, and I think some skills going into the state is also a good transfer of skill, and different for the individuals. It's very different from sitting at Reserve Bank in Pretoria to sitting at ABSA and running that. In terms of directly, the initial rumor when Mira went and why wasn't there replacement was that it was going to be, and the question was, why has it taken so long? And I suppose it's a process, and there's also going to be approval, and perhaps also current governor's term is expiring in October, November.
Mm-hmm.
Was he going to go for a second term? My sense is yes. Why wouldn't he? There's no reason why not. So in case if you were looking for that job, well, you've got another 5 years. And I'll say that, understanding that my sense of the Reserve Bank is it's not the deputies all sitting there waiting for the governor to leave they can grab the job. Because there are, is it 5 deputies? It's a lot of them.
There are quite a
maybe it's 7. There's a lot of them. But I think it would be a really good move for ABSA, notwithstanding that they've had no one in that pound seat for a while now, since February. And they desperately need someone. They need, the divorce from Barclays is still happening, and that's obviously being managed by a team, and that probably doesn't need a chief executive, because that's not just a process. It's ticking boxes and unraveling, and that probably doesn't need. But there's also no one sitting in that hot seat doing the strategy. They've obviously got Barclays Africa, which they now need to rebrand into ABSA and do their Africa move, and into the local market and get a little more aggressive in the lending space there, because ABSA certainly had tightened the taps more than the other banks. Quite. And then they need a CEO, and I think this would be a great coup for ABSA, if the rumours are true. I'm with you. Huge respect for him.
Very credible.
Yeah, I never met him, never communicated with him, but whenever he was being interviewed or something like that, it's someone who can CEO a bank, and I think it would be a great appointment. And I hope it's true, because I think ABSA needs it, and our market needs it.
And before we wrap up, final thought, completely top of the head, what are your thoughts on Christine Lagarde heading up the ECB?
So that's fascinating, and I did see today that she's now she tweeted she's temporarily stepping down from the IMF. And I'm like, hadn't even thought of that, had I?
Yeah.
I like her, and I mean, many accuse her of coming into the IMF by the back door because the other man whose name escapes me, the Frenchman who was accused of rape.
Sorry, I can't say his surname, but
okay, we know who he is.
Sozowski or something.
Yeah, and you know what, be it as it may, whatever, she has been head of the IMF. I think she's done a really good job at the IMF. I'm not an IMF or World Bank hater as many people are. I think they have some deep flaws, and I think some of the flaws are fundamental, sure, but I think they serve purposes, and at times they've done it poorly. I think Christine Lagarde is a great person. I like her frankness. I like the interviews I've seen with her. Again, never met her.
Yeah.
I think it would be a great move, and with all respect to Super Mario, or Mario Draghi as his mother calls him, man, those press conferences were sleeping pills. And I get you're a central banker, probably what it's meant to be, but I look at our current governor and I think back to the days of Jewel Marcus and Tito Mboweni as our governor, and they were fun, and maybe it's just a South African thing, because I remember it was Alan Greenspan, it was Alan Greenspan who had one presser for the Fed said, if you think you understood me, then actually you weren't listening and you didn't understand me. I mean,
wow.
He means to talk in riddles. Short answer, I think Christine Lagarde would be a great IMF head. ECB. I don't know who then goes to the IMF. That then becomes critical. But
yes, because everyone thinks Trump is trying to get us. So the rumors are head of World Bank will go to IMF, and then Ivanka will go and be the head of the World Bank.
Yo, I didn't even because
and that's been something that's been in the news for a while.
And typically the split has been the head of the World Bank has been an American, the head of the IMF has been a European. Macron, who's seemingly engineered all of this, because there's another European position that went to a woman, and I forget her name. He's basically snookered all of this very nicely, but now there's the opening at the IMF. Yeah. But traditionally that has been a European. The World Bank, you need technocrats and you need bankers at the top, but you also need people with and I hate to use the word, but let's throw it out there. You need someone out there with compassion, and that's why I like Christine. That's not something that sits on a CV, but when you're heading a IMF, you need someone who actually understands that what you're doing is helping people on the ground.
Yeah.
You know, proper individuals, the me's and you's of the world, and truthfully, for the IMF, people who are way worse off. Please not Ivanka.
All right, Simon, thank you very much for joining us, and look forward to seeing what July has to offer us as we head towards the end of the year. Wow, it's flown by.
Yeah, towards the end of the year, who would have thought?